the merchant doesn't live in the new world. The merchant lives in the reality of opening the store, welcoming the customers, making the sale, wanting the customer back, wanting the customer happy, wanting to understand the customer feedback. That's the merchant reality, right? And the innovation is really about bridging these two worlds, in my belief.
I'm Qori, co-founder and CEO at Olyn, and today we have Alain Falys. Welcome.
Thank you.
He's advisor at Olyn, co-founder at Qori, former vice president at Visa, entrepreneur, tech investor, venture partner at Fabric VC and Firestart, right? Which portfolios include companies like Railsbank, Waitstream, Polkadot, Sorare, The Graph, 1inch, among many others, right?
That's right.
Welcome to our offices.
Thank you.
So, Alain, you've been involved in the payment industry for quite some time, both in corporate and in FinTech, in startup, right? So, tell us, what was it like Europe before PSD2?
Well, it's Europe dominated by card payment and in some countries by cash payment. Oh, and by the way, it still is by and large because PSD2, as you know, is actually quite recent. I think the legislation came in force in 2018. The UK took the lead, and then you're starting to see now some payment transactions with PSD2 and open banking in the UK taking place mainly online. It's still rare, but you start to see it. What you've seen a lot of is the usage of PSD2 to gather information about the user. So it's called account information, to access basically your account information to provide things like credit, scoring and things like that. That you've seen a lot of. So that's one of the innovations of PSD2, but in terms of the usage of PSD2 for payment initiation is still very new. Mm-hmm. So we still have a world at least in Europe, but also also in the US by and large, which is dominated by card payment, albeit with a different form factor now.
It looks like it's about data and enabling third companies, new companies to enter into the market thanks to PSD2, right?
Yeah.
Just this morning, we were reading a press release from JP Morgan that they might be entering into the digital identity, right? And also in the book of Brett King, Bank 4.0, they mentioned that perhaps in the near future, payments and digital identity start merging. You've been one of the pioneers behind this innovative idea with identity payments. How did that come to be?
So I think there's two aspects to digital identity. There's one which is related to the ability to match effectively a purchase transaction, a payment transaction with a person. And then there is this sort of concept of digital identity that can be portable across different platforms so that you don't need to re-enter your passport information, details, and so on. So they're two different things. I'm just going to focus right now on the former. I was one of the founders of a company in London called Yo-Yo Wallet, which effectively was creating, or is in fact creating, a direct link between a person and a purchase. Because the problem that merchants have, and I think in this conversation, I think you will see that I will talk a lot about the merchant, because at the end, that's where all these things need to happen and the innovations needs to happen. I mean, the user is taken care of by and large, but it's at the merchant that needs to be some innovation. So the merchant in the card world is not able to identify its customer. It's easier online, it's absolutely impossible offline. So you pay with your card, you get this little voucher that says you pay 30 euros. The merchant doesn't know that this person has bought this particular basket, right? So he has the basket information, he sees that it was 3 different items with 3 different prices, but he cannot match that to the payment to the identity behind the payment transaction. So I think that this is a huge area of innovation. And now we're getting into a world where the interaction between the merchant and the user is going to become solely digital, meaning from a phone to a phone. not from a phone to a card. So that's one aspect. The other aspect of digital identity, of course, is this idea that you are able to transact across multiple platforms in the Web3 world, in the Web2 world, with your portable digital identity. And that is something which I know a lot of organizations are working on. Consortium, startups, some are now using some of the Web3 protocols, crypto protocols, to enable this portability of digital identity in a way that couldn't be done in the more traditional technology realm that we know. I think again we haven't seen that really or I haven't seen that really in action in everyday life, but that's coming as well.
Okay, you just mentioned, right? You're seeing corporates, startups, many people around working in this, let's say, innovation. But and we are seeing that you have a really expertise in Europe, but we know that it doesn't stop or ends there, right? So, what about regulation in the sense between, for example, USA market and European Union? How do you see that two points of view?
The regulation, well, I think by and large, the European Union seems to be quicker in coming up with ways of regulating payment activities, and not always in the most industry-friendly way, but Europe takes the lead. I mean, they've taken the lead on data, which has been with GDPR, which has been extremely welcome, and I think the rest of the world is effectively a fast follower of this type of legislation. You see, obviously, around PSD2 is effectively a way of breaking up a duopoly of cards, which is Visa, MasterCard, by enabling the merchant to accept other forms of payments. So it's also very much welcome. So these types of regulations are actually good. When it comes to the details of how it's actually implemented, this is where it becomes a bit more complex. I'll give you an example. The regulation in the UK for open banking really mandated that each of the 9 banks, the largest banks in the UK, would implement the same API for an open banking transaction, whether it's for account information or payment initiation. In Europe, we're talking about thousands of banks, I think about 6,000 banks that have to abide to the PSD2 regulation, but they all have their own APIs. So that's why you saw a number of players coming onto the market to aggregate these different APIs and enable companies like Qori, which, as you mentioned before, the company I co-founded, to enable an open banking transaction at the point of sale. So the regulation has been, by and large, good for the industry, but we only see the effects now in the payment world, as I mentioned earlier. Where it becomes tricky is in the crypto world, because now you have new regulation like PSAN, but they are not pan-European in scope. And this is where I think you are going to see some changes. Again, I think Europe will start to regulate everything crypto quite quickly now, I believe in a more harmonious way. And they started to do it already. I think the US is a market which is coming to regulation with a little delay, let's say. And then when it comes in force, it's obviously very stringent.
Yeah, what looks like as well is that Europe took the lead on regulation, but that didn't stop, right? American companies or companies from other regions to move forward and start innovating, right? Like Plate, for example.
Yeah, Plate is an example of a company which didn't wait for regulation in the US to create effectively this aggregation service of multiple banks to enable effectively an open banking transaction. Correct. Europe somehow, because of the diversity of countries, operates, in a different way.
So I guess sometimes you should not wait to regulators to come, but to embrace it, right? So beyond USA and Europe, right? No borders, no boundaries. What is the future like in payment in your ideal world? Like ubiquitous, speed, security, breaking silos. How is it?
First of all, I think that finally breaking that duopoly. I shouldn't say breaking the duopoly. It's more about having true alternative to card payments for merchants, and it's not for the sake of it. It's just that the economics of card payments are not right anymore. There are too many cooks in the kitchen, too many intermediaries. It's a very, very centralized world, and you have too many intermediaries that take a cut of payment transaction. Mm-hmm. So who has to pay for that at the end is the merchant. And the merchant is effectively paying for receiving money where there is absolutely no value beyond just the payment transaction. It's important, but there's no value beyond the payment transaction. So that the legacy of these operators, the card schemes, means that there's little innovation. There has been little innovation at the point of sale. So I think the future of payment is first of all where things like payment initiation with open banking, meaning the ability to pay straight from your bank account a merchant and do that at a fraction of the cost of a card payment, is good for the merchant, and it's good for the consumer as well. It's just a different way of actually accessing your money in your bank account, but it's a much more efficient way of doing it. So now, with the form factor being the phone, not just the phone for the user, but now what you're seeing is that the traditional acceptance devices that you see in stores for accepting card payment, for example, these are going to disappear. They're going to be replaced by tablets and phones. They're going to be replaced by the stuff that we're using as users as well. Mm-hmm. You're going to be able to download a software that enables a crypto payment, enables an open banking payment, and enables also a card payment straight on your phone as a merchant. Mm-hmm. And this is what the Qori proposition is all about, to create that single software. So what you see is that the form factor has changed on the consumer side, but is now changing also on the merchant side. Mm-hmm. What that means is that all of a sudden, you're not constrained by the limitations of Visa, MasterCard anymore, or the banking or the banks that are also in between these flows of transactions. You are able to create true innovation around the payment transaction.
One thing that I take from here is that there are too many cooks in the kitchen. I really like that sentence, and I also believe that we'll see these cookers become fewer and fewer. But at the same time, we believe at Olyn that the moment of payment, it's a magical moment, and many more things will come eventually in that moment, right? Many more value-added things. How do you see these things coming or surrounding this payment moment?
Sure. I mean, it's exactly the continuation of the previous point. So form factors have changed. This digital to digital is not a plastic card against a sort of dummy payment terminal anymore. Mm-hmm. And what that opens up is a raft of opportunities to create a direct interaction between the merchant and the user. We're starting to see that online, obviously, but online commerce is 20-25% of volumes and is growing. Offline commerce is where most of the commerce happens already. You can start to mimic effectively an online commerce experience around the payment transaction offline, meaning in the brick and mortar world. Mm-hmm. For example, the ability for a merchant to send a message to the client straight on the mobile phone with the client consent, obviously. That's massive. The ability to just say, you're a valuable customer to us and you're invited to a special sale on the 31st of October. That is an invaluable and very simple interaction between a merchant and a consumer, for example. The ability to basically provide a digital token of ownership of a purchase. You go and buy a watch. You can, at the time of the payment transaction, which you call the magical moment, you can receive an NFT of that watch. You can also receive something which is a bit more complete than just an NFT of the watch. You're going to receive a token that will have all the information about that watch and will also match it to that particular purchase. Again, going back to that purchase transaction data, which is now matched to a product and matched to an identity. That means that you can start to do things that you couldn't do in the card world. For example, you can get insurance companies to bid for an insurance contract against that watch. You are able to have the data to be able to resell the watch in the future or report it as stolen with all the data that is necessary. And all that can actually sit in wallets, on the blockchain, and without being too technical, in a way that is not really, it's actually immutable and so on. So all these things can happen at the point of interaction, again, because you've got now two digital devices communicating with each other. The other innovation in payment is, of course, around the ability to pay with crypto. So now you bypass effectively the banking system altogether. You have your crypto wallet. You are holding cryptos, whichever crypto, by the way, and you're able to pay at the point of sale. That's what Qori provides today to merchants: the acceptance of crypto without having to have a crypto wallet. A merchant would receive euros, but yet me as a consumer, I can pay my sneakers with Bitcoin if I wanted to, using the Lightning Network, or I can pay with Solana or any crypto. So that's, again, these things can happen now because you have a conversion of multiple forces that are finally starting to break the duopoly. You have the force of regulation with PSD2. You have the force of this digitalization of the form factors at the point of sale for the merchant and the user. And for the user is this or wearables. And of course you have the force of crypto Web3 world, which is opening up fantastic opportunities around, of course, payment, using your cryptos to pay, but also NFTs and tokenization of the information around the payment and the product and the identity.
And before going into more detail about Web3 and how they interact with FinTech, do you think that since FinTech were born, let's say, to tackle really specific needs or problems in the payments industry, for example, or banking industry, do you think there is still some pain point, some niche still to be tackled from the old world, from the legacy?
Well, I think the main pain point today is to bridge the let's call it the old world, which is where 90% of transactions occur, and the new world, which is emerging ahead of us. And it's great to think about the absolutely purest model of the new world, but again, going back to the merchant doesn't live in the new world. The merchant lives in the reality of opening the store, welcoming the customers, making the sale, wanting the customer back, wanting the customer happy, wanting to understand the customer feedback. That's the merchant reality, right? And the innovation is really about bridging these two worlds, in my belief. And obviously you have different players who are doing that. Like there's a raft of innovations. There's obviously Olyn on the digital ownership side of things. There's Qori for acceptance of any payment at a point of sale on any iOS or Android device, with all the added feature of loyalty, engagement, NFTs, and so on and so forth. And you have players who are working upstream to facilitate, for example, the access to crypto wallets for these fintechs. Because you've got thousands of wallets out there. You've got hundreds of currencies. You know, you have to be able to effectively plug into all these. So that's where there is innovation to be had. But I think the world doesn't just change overnight from a card world to a non-card world. I mean, by the way, the cards remain. Yeah. Contactless payment is great, Apple Pay is amazing. We have already a lot of innovations to be done, or still a lot of innovation to be done in the world of cards. For example, a company in France called Namastay is enabling an Apple Pay, Google Pay payment in one click on hotel websites. That's an innovation because hotels is one of the, or if not the last industry which has not really embraced Apple Pay, Google Pay for payments. So there is innovation to be had in the world of cards still, and there's innovation that we're working on also for the new world.
So right, there are the merchants, there are companies B2B out there still waiting for innovation today, which there's a lot of plenty of space, I would say, right? So now entering into this new type of competition, right? And you are already participating in endeavors regarding wallets and this new world. What's your view? Let's say what lays ahead of this FinTech Web3 wallet collaboration. You've mentioned already some projects you're working on. What do you see in the upcoming months?
I think the first challenge is to create a system whereby any wallet can be used for a payment transaction, not just online but offline. And it sounds easy, but it's not easy. And the way that's been done so far is by effectively creating closed loop systems. And closed loop systems are a thing of the past, in my view. Like, you have my wallet, and Mr. Merchant, you take my wallet, Mr. Consumer, you take my wallet, and therefore I'll be able to do a transaction between the two of you. That doesn't work. The world now is very different. We all have multiple bank accounts, we have some neobanks, we have traditional banks, we have different crypto wallets, we have MetaMask, we have Kraken, we have Blue Wallet, we have Trust Wallet, whatever. It's our choice. And anything that will constrain you into having effectively even an app that you have to go to be able to make a payment transaction or to access information like, your digital title of ownership token, for example. Anything that constrains you into one avenue is going to limit the growth. So I think that the innovation has to be about effectively aggregating these all different technologies and also blockchains, and be able to facilitate a transaction whereby the merchant will be able to accept things that he wants to or she wants to accept, which is euros for certain merchants, which would be some cryptocurrencies for others, dollars and so on. So again, it's that many to many world, which is very dear to my heart. I really think that closed loop systems should not exist anymore, and particularly in the Web3 world, because it's effectively counterintuitive in the decentralized world.
Right, and how it's still to see how companies will enter into this new open ecosystem instead of these closing loops. One thing we were seeing recently, right, is one of these players that appeared like 10 years ago, let's say, with open banking. It's now entering into open wallet, like offering new connector to many wallets like Pet, right? So perhaps it's a tool that you envision merchants or companies will.
Exactly. I mean, you're starting to see Plaid is now entering this world of effectively aggregating multiple wallets to enable fintechs like Qori, for example, to facilitate a payment at a point of sale or online, for that matter. But Fireblocks is also now entering this space, and it was just announced this week. So Fireblocks are known for their custody solutions, but now they're enabling these, what I would call processing of crypto transactions, and effectively off-ramping these cryptos to enable a fiat transaction at the point of sale. Again, they are concentrating on I would call it the back-end problem. So this is innovation at the back end to basically enable a smoother processing of transactions between multiple wallets on multiple blockchains with multiple currencies. And then you always need the value-added players that will help the merchant enter this world in a way that is not disruptive. Merchants don't want disruption. Merchants, I know for a fact today, merchants, particularly in the luxury sector, for example, hospitality, watches, high-end restoration, etc., they want to accept crypto, right? But they don't want to have crypto wallets. They don't know how to manage crypto wallets in their treasury, how to reconcile with the accounts. So you've got a lot of challenges to solve for merchants that these innovation or these aggregation services that we just mentioned are not solving. They're solving another problem. So you need all these pieces together. That's the beauty of the fintech world, is that we are solving a bigger problem together. No one is solving a single solution.
Yeah, right.
A single problem, sorry.
It's not about the technology underlying itself, but what technology enables or will enable to do to all of us, merchants, companies, right? Well, Alain, it's been a pleasure having you here, listening to your thoughts, to your opinions, sharing your views. Thank you very much for coming.
Thank you. It's been a pleasure.